today with Stephan Livera. Oh, I think it's not live, right?
I think we're live. Go on.
Ogon, yeah? Okay. Well, for another session with Stephan Livera. Now I see go live on the screen. On the screen, it's a bit strange.
Oh, it seems live from my side. Don't know why.
Let me check. I don't see it live on the screen. You can see it live?
Yeah, it shows live on my side. I'm not sure why. It says
Okay.
recording.
Yeah. Okay.
I'm not sure.
Well, that's a good start. The live pleasure. Let's see. I do see that it's playing out on the screen, so I guess we can start.
Yeah, sure. Go on.
Yeah, okay. Well, welcome everyone to another session of Capital B Talks. Capital B is Europe's first and largest Bitcoin treasury company, and we have started those talks to welcome Bitcoin legends to talk about what they've done in Bitcoin and talk a bit more about Bitcoin itself and take a step back, understand the asset, understand all that is happening in Bitcoin around the world. And today we have the pleasure to have Stephan Livera, who's been very active all along on Bitcoin technology side and as well the financial side, as we will see. Stephan has been one of the best analysts on the technology side of Bitcoin and very active as well as an investor. He has recently joined as well Orange BTC. As I was saying to Stephan, this is starting to become like Orange BTC talks with
That's right.
Eric
You'll have to
last
get Guy
time.
on next.
Exactly. So, Stephan, how are you doing?
I'm doing well. Thank you for inviting me on the show.
Perfect. So, Stephan, I guess you were in Lugano in Plan B. How was it? How was the feeling, and what were the things that were most discussed?
Yeah, so I mean, obviously, the elephant in the room, there was a lot of discussion around the whole core and not kind of arguments. But of course, there were a lot of things going on. Things like Jack Mallers is there with Strike, and there was kind of discussion about lending and collateralization. There was discussion on the technical side, things like Arc and Spark. There was, discussion. Funnily enough, I actually couldn't make some of the sessions just because I had like different podcast interviews for my own stuff going on, so I couldn't catch all of it myself. But I'm just sort of pulling together the pieces from what I hear and see online. But we're seeing, new L2s for Bitcoin, such as Arc and Spark. So there was a bit of excitement around that. There was discussion around assets on Bitcoin, so things like RGB, Taproot assets, and Liquid. So there was obviously some discussion around that. And I think the conference itself was really good. Like there was just, they just got a lot of things right. I've been going for a few years now. I think it might be my third or fourth year actually in Lugano for this conference and or forum. And it seems to have just been going from strength to strength. So well done to the team on organizing that and pulling together a really interesting crowd. Obviously, I would say there was some discussion about treasury companies, but maybe it wasn't sort of the big only topic. There was a lot of things going on.
And I guess, Stephan, a large portion of the audience from Capital B shareholders and Bitcoin treasury newcomers maybe have not got your full history from the technology side. I think it would be useful for you to tell us when did you adopt Bitcoin and what is your Bitcoin journey from technology to finance and all around the world.
Sure. So I guess professionally growing up, I grew up in Sydney, and I grew up and did accounting and finance. And so I went on to do basically to become a chartered accountant in Australia. So that I actually came from more like an accounting background, but I was a bit tech savvy and kind of interested. So then the story on the Bitcoin side, I was already a libertarian, right? And then basically I remember the moment, right? Like I remember I was on holiday back in Sri Lanka with family. And I was just kind of scrolling, and this was late 2012. I remember it was in December 2012. I came across this article that just kind of explained it and put it in the right light for me. And from then, I was just absolutely hooked. Couldn't stop thinking about Bitcoin, learning about Bitcoin. In those days, there wasn't a lot of good content at that time, or there were some videos, but it was like Andreas Antonopoulos videos, maybe a Roger Ver back in those days, and maybe Trace Mayer, a few people like that. There really wasn't a lot of good info out there. Of course, there was Bitcoin Talk Forum and a few things, but you're sort of trying to cobble things together and piece it together. And then I just had this incredible fascination and curiosity about it for a few months, and then I bought my first coins in early 2013. And so, at that point, it was extremely volatile, right? It's not like Bitcoin today. It was extremely, extremely volatile compared to today. Like that year, it sort of started at around $12, went to like 260, then crashed to like 50, then later in the year went to like 1,200, and then it was just wild, a wild year. And basically, in those early years, I was really trying to get people on board, right? Like many people, when you're new to Bitcoin, you're like shouting from the rooftops. You're trying to you're trying to get your family and friends in. And especially for me, when I was new, I thought, oh, this is all going to happen so quickly. Like it's all, it's going to be like a few years, and I want to get my family and friends on board. Now, of course, now it's funny looking back, right? Here we are in October 2025. Now, of course, I mean, Bitcoin has come a very, very long way. As we speak, it's about $115,000 per Bitcoin. So certainly, from that perspective, it's hard to sort of imagine, what, like that when, it was in the double digits, right? In early 2013, like dollars, per coin. And, there are early stories that I have, like I remember, giving a guy, for a birthday present, I remember giving back in those days, like 2013, 14, around then, I gave a guy, would you believe it? Half a Bitcoin, $50 at the time for his birthday present. And but that unfortunately, that story has a bit of a sad ending though, because I think I just kind of assumed he was tech savvy and he would be able to look after it. But then later, after a few years, I found out that he had actually lost it. So then it's like, damn, he lost, now that's, a decent amount of money, unfortunately.
You contributed to the scarcity of the supply.
Yes, he's contributed to the scarcity of Bitcoin. So, I guess, and then in terms of the technical side of things, I was, talking about Bitcoin and things like that, but I started my podcast in 2018. So that was when I sort of started, let's say, interacting more internationally with, Bitcoiners around the world. And so that was where I was doing a lot of these interviews. And as part of that, in order to be able to do those interviews, I ended up having to go and actually do some more reading and do some more learning about how Bitcoin technically works as a system in order to be able to do good interviews. Now, I certainly don't consider myself some kind of, technical genius or anything, but I think where a lot of people go to me or listen to my podcast on things is because I sort of cover kind of like the zeitgeist of Bitcoin, like what's kind of a current topic, and also especially technical topics in Bitcoin are things that I'm known for. So I'm known for having somebody on. Usually I'll get, if somebody invented or created a new technique or technology in Bitcoin, I'll usually invite exactly that person on to come and explain, okay, what is this new technology? How does it work for us in Bitcoin? What does it mean for us? Whether you are an end user, whether you are a developer, a builder, an investor, just various areas, or if you consider yourself an educator, right? So these are some of the kinds of people who might listen to my podcast. And so, as part of that, then I ended up just often going around to these conferences and being, a moderator or an MC, or some cases a speaker myself. And so that's how I got here, I guess.
And what is your vision of the evolution of the Bitcoin technology side? You said you invite a lot of developers and project leaders. What is your vision of the evolution over the last years, and what has been working, what hasn't? And what's your view on what is happening now that is a bit changing or was not expected? Even in Lightning, for example, there are new players that come out and that were not there even 3 years ago. So what's your vision on that front?
Yeah, good question. And I would say there is so much happening technologically, but it's like you're just running on this treadmill that's ever expand or increasing in speed. So it's just hard to keep up with it all. So there's all this stuff kind of in the mining world of how do we try to make Bitcoin more decentralized, like the pools decentralized. There's things like what we call L2s or layer 2s for Bitcoin, obviously Lightning, Arc, Spark, And I guess there's kind of other things that kind of broadly go in the category, but maybe technically people might say they don't fit there. Things like Liquid, Cashew, and Fedimint, different things like that. And then there's some of these ZK roll-up startups and things like that. And then I guess what we are seeing is kind of, if we go back to the block size wars in 2017, the community per se, or the nodes of Bitcoin, made the, let's say, decision to say, we are not going to go this pathway of just increasing the block size. We're going to keep the block size limited. Now, SegWit was a block size increase, but basically it made the theoretical max size 4 megs per block, but the actual in practice size was more like 1.6 megs. And so that was what happened there. The community as a broad whole made this decision of, we are going to use scaling in a layered approach. And Lightning was at that time chosen or spoken of as kind of the main primary go-to approach. And so the idea with Lightning is, instead of, doing everything on chain, you open a channel and you route payments across that network, and then later when you choose, you can close that channel. Now, of course, there's more technical details. We're not going to go kind of into the nitty-gritty of it, but the gist of it is that it can take a lot of commerce off chain per se, right? Instead of every transaction going onto the blockchain, we are now achieving a kind of a compression ratio. So instead of, I could open one channel with you, or I could have multiple channels and just route hundreds or even thousands of channel payments through this Lightning network, as an example, without closing that channel and going back on chain per se to close that channel. Now, what I would explain to your specific question around the last 3 years in this world, what we have seen is a big growth in Lightning volume, right? So the Lightning network, what's kind of funny is that the actual stock of coins kind of locked into Lightning per se hasn't actually shifted that much, although obviously the fiat price has risen. But what we have seen is a lot of volume growth. So we've started to see volume growth in that. And part of that is driven in a few different things. So we are seeing a lot more use of these different layer 2 wallets. So some of these wallets, they maybe are not directly interfacing with Lightning, but actually what's going on is there's some kind of swap provider in the background. So a quick example would be something like Aqua Wallet, or Bull Bitcoin has a new wallet, which is a Liquid-based wallet. So that's kind of another, Liquid is a federated sidechain, and the idea is, instead of having Bitcoin on the main chain, you can have some coin that's pegged into a sidechain, and your wallet can keep that there for smaller spending amounts. And it has things like faster block times, cheaper transaction fees, and things like this. So people might keep some balance in there, and when they want to make a Lightning payment, that Liquid wallet, like Aqua Wallet or Bull Bitcoin or some of these other ones, is doing a swap. So in the background, it's kind of doing a call out. Bolts.exchange, which is a swap provider, is kind of actually making the Lightning payment for you, but actually on your side, you're just doing a Liquid payment. And then the same can happen in reverse. But the gist of it, all that is that now Lightning is becoming a kind of common language for Bitcoin, right? So even though there are different layers, things like Lightning itself, there's Arc, there's Spark, there's Cashew, there's Fedimint. These different layers you can hold a balance in some of these different layers or different things, but at the end, when you actually need to make the payment, you're making kind of that last payment. Lightning is becoming like a translation layer. So even if you have a Liquid wallet and I have, let's say, an Arc wallet, well, you might still be able to pay me, because at the end of the day, your wallet is scanning what looks like a Lightning invoice. But actually in the background, there's some swapping and things going on. The gist of all this is, kind of explained in simple terms, is we don't have to think as much about it now, because you just kind of have a simple end user send, receive experience. And that's what we're now starting to see. We're seeing an evolution in that. So we're seeing more and more companies who are coming out offering some kind of solution that allows them to, allows developers to deliver that really easy experience, right? The idea is to kind of bundle the complexity into the background so that the end user gets a very slick, easy earning and sending experience. And we're seeing that things like Lightspark have this thing called Spark. Arc was also publicly launched just at the Lugano Plan B Forum conference. So there are a number of ecosystem players who came to that and said, yeah, we would like to integrate Arc into our wallets. And that can also give a very, very slick experience and allow more programmability without changing the base layer protocol of Bitcoin. And so that's a really fascinating thing, because then in Arc, then it allows people to do, as an example, they can do things like maybe lending against their Bitcoin. But inside of Arc, they can do things like maybe in the future, there may be some kind of DEX or decentralized exchange protocols that are kind of built, that can settle back down to Bitcoin layer one, but the actual execution layer, if you will, is happening up in this, what's called a virtual chain in Arc or arcade scripting. So that's just an example of some of the things that are being enabled. And so some of this can enable things like if people want to have stable coins, but inside of Bitcoin, or things like peer-to-peer exchange settling back into Bitcoin, or functionality like escrow functionality. So let's say, we need some kind of smart contract thing that holds the balance in the middle until one side has has said, okay, yeah, I've received this other thing. And so what we're starting to see is this, and I understand some of this stuff can be maybe a little bit niche and technical, but what I think the end result, if you are just an end user, is you are going to get a very slick experience, and you are going to have easier ways to either onboard into Bitcoin or off-ramp out of Bitcoin. So these are some of the things that we're starting to see. And it's just such a rapidly evolving space. So it's really hard to actually get your hands around it, because there's just so many things going on all around the world. So it's just, I guess I'll stop there and see if you have any other follow-up questions.
Yeah, it seems like this has accelerated a lot from commercial mainstream perspective since the US election of Donald Trump, and the partnerships with Lightspark and Coinbase and other things that have popped up like this that were not happening 4 years ago, for example. So what's your view of the adoption of actually the payment side of Bitcoin? There is this never-ending debate on the store of value and means of exchange. Both are needed, but there is one that is, of course, very important, and the first one is the store of value. But the peer-to-peer payment is quite important, and there would not be censorship-resistant aspect without the mean of exchange as well. So what's your view on the actual adoption within the hands of the retail participants?
Yeah, so I don't have like hard numbers on how many people are doing payments, but I can say Lightning volume, as in the flow of that volume, is growing steadily over time. So I did an interview a little while back with the founder and CEO of LQWD. They host, some of the Lightning Network's biggest Lightning nodes, and he's telling me the volume is going up. So even and it's kind of like a secular bull market for volume there. Like, it's not just the price, right? In past cycles, everything was correlated to the price, right? It was just like, if the price is running up, then everything goes up, right? Exchange signups goes up, podcast and YouTube downloads go up, users of Bitcoin wallets goes up, mining hash rate goes up, right? That was kind of, in the past, it was very correlated to the bull and bear cycles. But what he was explaining is actually now it's kind of just growing in a secular rate. And so that to me kind of shows it's just a network that is being adopted. Now, of course, I'm a diehard Bitcoin maxi. I love to hodl my coins, and of course I love to earn and spend Bitcoin wherever I can. But I also try to be realistic. I understand that for most people in the Western world, I would say they do not have a payments problem, right? Because nowadays people have a very high expectation for what payments should look like, right? They expect nowadays to tap a card or tap their phone or maybe tap their watch, and that's the payment experience they expect. And so most Westerners, let's say, from the developed countries, just simply don't have a payments problem. And so what everyone on earth has is a store of value problem. And that's where obviously Bitcoin and potentially Bitcoin treasury companies can come into it. But of course, it's not your keys, not your coins, all the normal, maxi messages. But I see it like we are just naturally going to see more adoption on the store of value side. The payment side of it is still growing, but just I think it's going to come more into the future. But so while I obviously advocate for people to earn and spend Bitcoin and to hodl, I understand that for most people the appeal is going to be hodl, because NGU, Bitcoin is savings technology. It's about escaping the melting ice cube. So I try to be realistic, but that's how I'm seeing it.
Well, actually, I think that if you don't spend Bitcoin for the purposes of, buying groceries and so on, like it is possible actually in Lugano, with all the merchants that already accept it is because you don't have enough Bitcoin. Because if you are really on a Bitcoin standard, then you have no fiat left, and you have to allocate a budget for more Bitcoin buying for the purpose of spending, of course, with the groceries and so on. So I guess that because if you make a budget for the spend that you will have for a month and you will allocate that for spending, then you will not maybe consume all the budget and you will end up with more Bitcoin. At least that's the objective. Something else that has popped up a lot is the fact that when you pay with a traditional card, you can have these BTC back programs, you know, the reward, but in BTC, because these earning points are useless. So it's better to have Bitcoin. And as well, in France, there is a company called Bitstack, and I know Revolut does it as well. When you can round up the amount paid every time and have that amount in Bitcoin. I guess that is also a very good way for many people to get into Bitcoin. I've seen some credit cards as well. And as you said, like the things that are popping up are quite endless now. So for someone that would already be Bitcoin maxi and has already had a lot of experience in Bitcoin itself, but from a finance side and not from a use side, and that would be interested in spreading Bitcoin adoption. I had a recent interview with Parker Lewis, that you know, of course, and
Of
that
course.
who has been leading as well the way for the adoption of Bitcoin as payments as well with merchants and so on. I guess there is a lot of benefits for the adoption of Bitcoin, for merchants to accept it and people to start using it. So, what would you say to that person that is interested to start spreading that adoption as well on the means of exchange side, but that doesn't know what solutions to use and is a bit lost, might have bought some Bitcoin on exchanges or would have some cold storage? What would be your general view on the solutions that could be useful for a beginner?
Yeah, so as you mentioned, Parker works for Zaprite, and so Parker's a friend of mine. I've known him for years now in Bitcoin. So Zaprite is actually a great solution for that. People can use Zaprite to take Bitcoin payments, and so that's a great way to kind of plug it into different things, and you can plug it into your own different wallets. That's a great solution. Another great one is BTC Pay Server. So this is like a well-known favorite thing in the Bitcoin community amongst kind of the hardcore online. And the cool thing with this is there are some really cool updated protocols that have come out that work with BTC Pay Server. So one, funnily enough, is called the SamRock protocol. So if you know Samson Mao from Jan 3 and Rockstar Dev from BTC Pay Server. And so they came up with this really cool protocol, which allows, I believe it's Aqua Wallet and maybe some other wallets will also support this, but it's like you can set up this, you know, one instance of BTC Pay. And now to be clear, this part might require a more technical person, but I'll get to the easier part. One technical person can host this BTC Pay, but he can have many instances on top of that that can be used by a relatively, you know, not so tech savvy person, right? These other people can host their own shop, and it'll be a simple scan a QR, and it's kind of a lot of the automations are all built in. So the cool thing is you don't have to worry about running a Lightning node. It's kind of all done in the background with swaps, right? Bolts.exchange and things like this. So it can show, oh, here's a Lightning QR, but actually in the background, that Lightning payment goes to Bolts.exchange. They flip that into liquid Bitcoin, which then goes into your Aqua wallet as an example. And so then you can just keep receiving that liquid Bitcoin. And then occasionally, periodically, let's say you get above, I don't know, 1 million sats or 5 million sats, set your own threshold. You can then flip that LBTC back into main chain Bitcoin. And so that's like a very simple way that you can actually have kind of self-custodial, or at least with certain trade-offs, to be clear, in the liquid world. Some trade-offs around that, but once you flip it back into main chain Bitcoin, you've got self-custodial Bitcoin. And it's like very simple in the background. And then here's the other cool thing. I believe they've even integrated some Tether stuff in there as well. So that might even allow kind of Tether swapping quickly inside the app. So I think this is really cool. And so well done to the guys over at BTC Pay and at Aqua for helping set that up, because I think that's a great example of what people can do if they're interested on how to actually do this merchant setup. A few other tips I would say though, sometimes, again, when we're new to Bitcoin, I would just warn people, sometimes we want to go shout from the rooftops and get as many people on board. But there is a trap here a little bit, because if you try to onboard too many merchants around your town, the problem is if they don't all get enough flow on the demand side, they won't get enough use on their side. So it will feel a bit like you've onboarded them and then they're not really getting enough actual payment volume. So what I would say is kind of try to do it in a sustainable way. Like only try and onboard someone as a merchant if you personally will actually spend there. Or maybe, let's say you've got a Bitcoin meetup and you might want to organize a monthly meetup there so they get some actual volume, so they get something out of it, right? Mm-hmm. So I think there have been historical examples of people tried to onboard 200 merchants in one area, and then after a year, they just kind of forget, no one cares, they lose it, they don't know how to accept it anymore, this, that, and the other. So there's different things that go into that, but certainly I'm a fan of that. But you have to sort of approach it in a smart and intelligent way. But yeah, summary, there are tools like Zapwrite or BTC Pay Server using the what's called Samrock protocol to make it easy for merchants to earn and spend Bitcoin.
Mm-hmm. And for individuals, so that was for merchants, but for individuals, would you recommend for a newcomer?
Well, I guess if you are savvy enough to set up a BTC Pay, you can also use that as an individual, or otherwise, even Zapwrite, I think you can even use that as an individual too. But I guess for an individual, it can be a bit more of a special case, because it really depends. Like if you're just let's say you're just a guy at a farmer's market selling your meat or milk or something, well then just use a handheld wallet, just get a phone wallet, something like an Aqua or even a Lightning wallet like Zeus or Phoenix wallet. These are different examples that you can use that are, relatively simple and they quote unquote just work.
Another technological topic that I know you've discussed in Lugano is this debate with the developers in Bitcoin around the core and knots. Could you summarize first your view of the situation for someone that is not familiar with it? Okay,
so there's you can think of it as kind of warring factions inside of Bitcoin. So it's kind of like a civil war in a sense. And it's not obviously it's, in some ways it's, that's kind of a downside. I think it would be not much nicer if everyone wasn't fighting. But the reason for this is basically there's one group of people, they're extremely loud, and that's the Knots camp, and sort of one of the leaders there is Luke Dasher, and some other, and people like Bitcoin Mechanic are kind of in that camp, let's say, and they see it like there's too much spam happening on the chain in Bitcoin, and they see it as these non-monetary transactions or arbitrary data file storage. It's happening in Bitcoin, and they see it like, oh, core devs, you're not doing enough to stop them, or you're kind of bending over for these spammers and or shitcoiners who want to just kind of spam the chain with whatever. And so that's kind of one view. And then on the other side of that, it's most of the core devs, Bitcoin core devs, which is the reference implementation of Bitcoin. And to be clear, Luke Dasher in the Knots camp, he runs an alternate implementation of Bitcoin, and that is based in code on Bitcoin Core, but there's maybe 20,000 lines of code or something different, something like that in that range. And so it's sort of like Bitcoin Core, but with certain patches and certain ways of filtering out the spam. Now, on the core side of the house, they have their own perspective on why they quote unquote haven't fought the spam as hard as, let's say, the Knots guys would like them to. And so I guess the simplified, it's kind of, some of this stuff gets into very deep technical nuances, but I guess if I had to just give a high level summary, the core side of this sees it like it was always easy to spam. There were always ways to spam Bitcoin. There's only so much that can be done about it. And some of these efforts to try to stop spam at a relay level when you're relaying transactions around is going to end up being futile, or it can end up having other negative consequences. So from Bitcoin Core and most of the core devs' perspectives, to be clear, Bitcoin Core is not a monolith. There's many developers with different views. So I'm just trying to summarize sort of the key highlights that, let's say, most of them would agree with. Most of them see this like, if you try to stop this spam too hard at the relay level, they will either use alternate relay networks or they will use what's called direct to miner submission. So there's, some big mining pools around the world, and they often offer ways to just sort of pay them out of band to get something put into the chain. And so there are examples of things that a default node would not relay on the network, but if it was inside of a block, like if you went directly to a miner and they included in one of their blocks, a mining pool, they included in their block, the nodes will see that as consensus valid. Okay, and so the core side of this debate sees the negative outcomes being things like either reduced block propagation times. They see it like so let me just explain. So the reduced block propagation, most of the core devs would see that as this is going to be a centralizing pressure on Bitcoin mining. And so that's one key argument. Another argument is that if you try to shut down relay of some of these spam or non-monetary transactions, the problem is that then the spammers can use more harmful ways to spam Bitcoin. So as an example, they can create kind of spam UTXOs. And so this is unspent transaction outputs, and those go into that is like a more critical thing for nodes, that if that space gets taken up a lot, or like if a lot of fake UTXOs get made, it makes it harder and harder for new nodes to sync, which also impacts the decentralization of Bitcoin. Another impact they will say is you'll have reduced fee estimation capability, right? If you're running a Bitcoin node, the idea is when you want to make a transaction, you might need to estimate what the fee is. And so I would say those are some of the main negative consequences. And so like this kind of war, let's say, or civil kind of battle, let's say, had been going for a couple of years, but in more recent times, with the new release of Bitcoin Core version 30, there was a contentious pull request relating to op return. And so this is kind of getting into another, so op return itself was something that was, well, actually, let me just stop there. Are you following everything so far, or
Yeah,
do you want me to go on?
from a perspective of someone that is not in the daily technical details, but following the different arguments from Adam Back and yourself and some of the Knot's proponents, it seems like there is a valid argument around the size of the types of files that you can add, or the type of additional things that you can add to the transactions. At the same time, it seems also that in some way, with the effects that you mentioned of the filters that do not even necessarily prevent spam in and of itself, it seems like with the negative effects of the filters and the usage of the normal use of Bitcoin, it seems like the filters are spam in a way because of the potential negative effects on the use of Bitcoin for normal things and legitimate use cases. So then the question is, maybe what is the way forward? Because it would seem like a rational route would indeed to, if the filters don't solve the issue, then core would prevail. But at the same time, and on top of that, it seems like the filter side has a positive effect because it says, look, there is an issue there, we have to find solutions and so on. But what would be a potential way forward if there is one? Because also modifying things is a risk in and of itself.
Right, and so it's kind of, there's a few layers of irony here, but let me kind of explain a little bit further into what's going on. So a lot of this debate comes down to what's known as policy versus consensus. So consensus means, would your Bitcoin node consider that valid if it was in a block? Yes or no, right? That's what consensus is. And in order to change consensus, we need to do a soft fork or a hard fork, right? Like we literally have to, it's a big deal to change that. And that's why it's not so easy to do that, right? The last times we did that is in 2021 for Taproot, and prior to that, 2017 SegWit, which was a big, battle and drama in those days. Now, on the policy side, that is more just like, what is your node setting? And this is something that you can manually set these things. And so you can go into your config file, and you can change certain settings around things like data carrier size and things like this that have become contentious, or as a result of some of these debates. Now, let's say up until recently, right? Because some of this did just kind of recently shift, but up until recently, this has basically been a policy fight, right? There hasn't been a discussion about changing consensus, right? Because for a long time, the argument from the NOTS side was, no, look, relay filtering is effective. We just need to, more people to use it. And from their perspective, they'll say, look, Core, you broke certain filters, and we need you to put those filters in and refix those filters to stop certain forms of transactions that they view as spam. So by that, they mean things like inscriptions, i.e. JPEGs, or colloquially JPEGs being put into the chain, or something like a token protocol on top of Bitcoin called BRC20. So again, I'm not saying I like this or endorse this, but I'm just saying this is what people have done. And so those were probably the two principal things that are seen as spam. There are other spammy meta protocols, let's say, on top of Bitcoin, but they would see it like, no, we should just try to filter all of those things. Whereas the core side of it is saying, you end up kind of starting to play this cat and mouse game of like, even if Core tried to fix those things or filter those things at the relay level, remember, there's nothing stopping people change settings on their own node or using other software which already is more permissive in its relaying of transactions, such as things like Libra Relay. Now, this gets contentious because some of the NOTS people see it like, hey, Libra Relay is an attack on Bitcoin, or it's somehow not part of the network. But the thing is, Libra Relay does connect to just standard Bitcoin nodes. It connects to Bitcoin Core V29 and V28 and V30 and other Bitcoin nodes out there. So it is part of the network. Now, they would say that's kind of just like direct submission to the miner. That's a bad thing, etc. But nevertheless, it exists. And so this is like, there's a broader philosophical thing here or debate here about the approach that should be taken, right? Like, I think the filter side of this would see it like, no, there should just be like regular, filter updates. Whereas on the other side of this, the development philosophy of Bitcoin Core, or basically almost all Bitcoin Core developers, is that Bitcoin Core should not have auto updates. Because for security reasons, is it creating a single point of failure? Is it creating a sort of coercion of updating? And so for this reason, there's kind of a philosophical difference. There's also a difference in the speed at which they can operate, right? Because if Core tries to put in a new filter to stop a new form of spam, the spammer side of the equation can go create a new way to spam the chain, and that new way may be even more harmful. And so the debate has often centered around things like, hey, do filters work? And then people will sort of say, well, under certain circumstances they might, or it might be a nudge, or it might be a slight deterrence, but then once there's an economic motivation or incentive to actually go around that filter, that's what people do, and then that itself is a centralizing factor to mining, and so therefore it's better to keep the mempool. So it's kind of, we could have like an 8-hour podcast just about this topic, but I'm just trying to kind of shortcut it a little bit to make it simple. And so most of the core people see it like, look, the principle of Bitcoin is no auto updates, because we don't want to impinge on user sovereignty. And so if the idea is like every 2 weeks there's a new batch of filters that you need to download and things. Now, of course, the NOTS people have their own kind of arguments here. They might say things like, well, we can have this other separate thing that does the filters, and that's the part that updates while Bitcoin Core doesn't, things like this. But I don't really buy that personally, because I just think you're sort of creeping back in, or pushing that same problem back in of like, well, what if the wrong filters are in play? Who do you go to change those? What if people disagree about the filters? And then we're sort of back to the same problem, right? Because I think broadly zooming out, there's this thing called the quote unquote tolerant minority effect, right? So because in policy, the more, let's say, liberal your node is at relaying, it can sort of effectively change the behavior on the network. And so node types like Libra Relay, which, to be clear, is not Bitcoin Core, it's another type, but there's a bunch of guys who run that, and that is seen as a more so I guess you can frame this like, one side of this, the NOT side see themselves as fighting spam and trying to really go hard to fight spam. Whereas I think the core and some of the Libra Relay guys see it like, you've also got to think about the long-term impacts to mining, and you've also got to think about the impacts to censorship resistance. And so that's why some of these guys, philosophically, some of the guys who run Libra Relay, they do it because they think they are maximizing Bitcoin's censorship resistance, right? So I guess if you had to try to put forward what does each side think they're doing, right? The not side sees it like, well, if too many people put spam into the chain, that kind of impacts the quality of Bitcoin as money, or it kind of stops genuine monetary use. Or more controversially, they've been kind of arguing, oh, what about if quote unquote illegal, if I don't want to get you banned off any platforms, but let's just say if somebody puts illegal content into Bitcoin. And so there's arguments back and forth on how possible that always was. And to be clear, there's this kind of, one of those spammy things is called inscriptions. And because of kind of how they hacked data into what's called the witness of transactions, they are already able to relay 400 kilobytes inside an inscription. Like just most of the network is already relaying that anyway, just by, just most of the default software. And so there's been a lot of consternation and anger about going up to a default of 100 kilobytes for op return relay when, to be clear, 400 kilobyte inscriptions have already been being relayed. So it's sort of like, if your concern was 100 kilobytes, why isn't 400 kilobytes a big, an already bigger concern? And to be clear, the Knots guys are against that 400 kilobytes inscription, but they seem to just kind of draw this, what I view as a bit of a hair-splitting definition to sort of say, no, only op return is somehow the risk from, let's say, the state, if the state finds whatever illegal data in the chain or something like this. And so they sort of magically exclude inscriptions from that, even though millions of inscriptions have already been posted into the chain. Now, again, not saying I endorse it. I'm not a spammer myself. I have zero, investment in spamming or shitcoining companies, nor do they sponsor me or anything like that. I just genuinely believe there's a genuine argument here to be had about kind of the censorship resistant aspects of this. And then also the other argument from the core side of this and Libra Relay people is that if you try too hard to lock down things to sort of stop quote unquote to stop arbitrary data, right? To stop spam, you also genuinely can end up harming monetary scripting, right? So in Bitcoin, like actual scaling and monetary technologies, some of these are actually being enabled by some of these things. And I'll give a quick example, right? We spoke about Lightning. Believe it or not, there's actually a small piece of arbitrary data that gets posted to the chain as part of what's known as a Lightning justice transaction or a breach transaction, right? So it's not payment data in the sense that it's not related to an address or to a payment amount. It's a hash that relates to kind of, I don't have to get into the super deep technical details, but the point is that's how the Lightning security model works. And so you can sort of argue that's an example of quote unquote arbitrary data that still helps our monetary use cases, right? And of course, some of the, the not side will sort of try to draw distinctions around that to try to say, well, okay, fine, that one's okay, but other things are not. But then you can sort of expand that example to sort of say, well, okay, if you're okay with that amount of arbitrary data for Lightning, what about if there were other things like ZK rollups that do need, larger forms of data? And the point is that they will help achieve other forms of monetary or financial scaling. Now, of course, NOTS people will kind of if we're shadow boxing back and forth, they might argue, no, but that's also enabling, shitcoins or some other form of spam, or they should re-engineer the protocol to go below the certain threshold that they see as okay, below 83 bytes or whatever. But I think the point is there are genuine forms of monetary scaling that we risk losing and monetary scripting that we could end up losing if we sort of try too hard to stop this thing. So I think it's sort of like sometimes in life you have to bite the bullet, right? And I understand for some people that they might see that as like that's a defeatist position. But for me, I don't see spam as an existential threat. Like the fact that people just post random inscriptions and things like this, I think for me, most of those inscriptions actually get priced out pretty quickly as soon as we start seeing real monetary demand on chain anyway. So for me, I'm not that concerned about the spam issue. And okay, yes, the illegal data was always a concern, but I see it as it was always a concern. It's nothing like, it's not an incrementally new increased risk here. It's just something that we've always had to have in Bitcoin. Thankfully, I think, I think that there will effectively be some kind of safe harbor provisions for it or some kind of like, because when data is posted into Bitcoin, it's not just like a file that you can just like double click. It's kind of, it's inert hex. It has to be sort of interpreted. You need computer tools to actually read these things. And so I think in that sense, I think it's, it's the same risk that we've always had. I don't see it as a, as a massive risk. Now, of course, people will disagree, and that's part of what this disagreement is, right? Because most of the knots and filter side of this argument will say like, no, that's a huge, huge risk. You need to do something. You need to kind of pull out all the stops to stop that thing. Whereas most of the core people see this like, well, like, what's a big deal about 100 kilobyte op returns? Because 400 kilobyte inscriptions already exist. And don't forget, those inscriptions go into the witness part of the transaction, which gets a 25% price. So it's literally 4 times more costly to use op return than it is to use an equivalent inscription. And so that's kind of the gist of it. And then where I land on this, I think Core have made maybe some mistakes around the comms and handling of this, but I still think they are broadly in spirit correct. And they've got a lot of the long time, let's say OG, graybeard, wizards, let's say, like really deeply technical guys who have defended Bitcoin and been around for so long and helped sort of shepherd it through all these years. And they are the ones telling you, yeah, I think these are serious risks in terms of mining centralization pressure, or things like block propagation, things like fee estimation and UTXO spam, or encouraging that. Right now, of course, there are big arguments back and forth. Every one of these points will be highly contentious. If you spoke to a diehard knots person, they would sort of have different counter arguments. But at least this is how I see it. I think it's kind of a bite the bullet situation where, I don't think I think it might be feasible to stop the spam if we really, really locked everything down in Bitcoin. But I think it might be a Pyrrhic victory, right? We might actually lose more than we gain out of that, because we might lose our actual scripting capability. We might lose some scaling capability, and that would be a bigger, and we may even lose the censorship resistance components or aspects of Bitcoin, which would be a bigger problem for us longer term.
Well, at least it seems like it's great that the both camps have the freedom to use their own version and to continue in the adoption of Bitcoin in different ways. And Bitcoin doesn't really care from what I can see. And I think it's a healthy debate to be had. It's a long overdue, I guess, and now it's coming out. I think your arguments around the potential effects on the very monetary use case, which is the case for Bitcoin, are definitely incredibly important, and shows that the potential solutions for a problem can generate more problems. And that's why you need to take a step back and be very careful and actually listen and read what Adam Back is saying on X on the topic. And I guess you have lived the block size wars, and I guess that even if there are disagreements, Bitcoin continues and functions well, and the hardcore libertarian censorship resistant ethos is the one that prevails, because that's the cold, silent majority that prefers to just have this as a priority. So thank you, Stephan, for those contributions. And I invite everyone that's interested in the technology side to follow you and on this debate as well. I think it's very important information. You mentioned the monetary use case. What do you think of the recent uptake of Bitcoin financialization into Wall Street with the Bitcoin treasury companies? You are now also part of this very actively. What's your view on the market since the early beginnings with Strategy, Metaplanet, us at Capital B before 2025, and then the full craze of 2025, the mini accelerated bear market that we've had, and now an uptake of a lot of interest because people realize that they don't even have to pay almost a premium for all of the future efforts of a Bitcoin treasury company along the following years to buy more Bitcoin for them. So what do you think about
Yeah.
this? What is the potential future that you see for those Bitcoin treasury companies? what is the adoption of Bitcoin from institutions that has been of very high impact in your eyes? And what can that as well entail as part of the adoption of Bitcoin?
So as you probably can guess, I'm bullish on Bitcoin treasury companies, right? I think it's, it's in some ways, it's a way of putting the tool. It's like putting, like the analogy Michael Saylor makes of like, like an oil refinery or whatever. But the point is you're putting this thing in a way that that people can actually access it and buy it, right? And I think that's one important thing. And of course, the classic kind of speculative attack by my friend Pierre Richard. I know you hosted him on as well. Pierre has been actually one of my first few friends in Bitcoin. Back in 2013, 14 days, he and I and Bitstein were kind of, obviously massive fans of Bitcoin, and I was following some of their work and they were following what I was saying. And so, I remember when Speculative Attack came out in 2014 as an article, I thought it was phenomenal. And I'm pretty sure actually I've got a comment somewhere on that page back in those days. And yeah, I think there's just fundamentally an arbitrage here, right? So from here until hyper-Bitcoinization, which, I mean, none of us knows, but let's say that's 20 years out, 20, 30 years out, who knows? From here until then, there's a window. There is an arbitrage window that's available. And if you can borrow fiat cheaply and buy Bitcoin, now, to be clear, you need to get the right terms, right? Because obviously that you can have credit that's very bad for you and not on good terms or with a bad rate and so on. But sort of loosely speaking, less than 10% interest rate. And obviously if it's a longer duration, that's better. Obviously the less encumbrances that debt places on your Bitcoin stack or on other things about how you operate your business. Obviously these things all matter, but the gist of it is if you can borrow at 10% or less and Bitcoin is growing at, let's say, 30 or 40% per year, it's a no-brainer, right? And that's the fundamental just kind of business model, if you will. I see that as the business model. So I understand there's been a lot of criticism from some in the more, let's say, cypherpunk world who are sort of more strong on the not your keys, not your coins. And of course, to be clear, I would always say first and foremost, hold Bitcoin, not your keys, not your coins, right? Self-custody. But I see these treasury companies as, if you want to sort of take a play on those, I think it can as a smaller part of how you're thinking about your, let's say, your Bitcoin. So, the way I see it is like have most of your kind of exposure in cold storage, ideally multi-sig, and then a smaller amount is where you can, let's say, take a smaller chunk of that, and if you are thinking, okay, I'm getting a good entry on this Bitcoin treasury company because I believe they are executing well, they've got a professional team, maybe they're well placed in terms of what jurisdiction and the rules, the jurisdictional arbitrage, the regulatory arbitrage, some of these aspects of it. I think that's how I'm seeing it. I do agree with the perspective of winner takes most. So, of course, Michael Saylor and Strategy, the obvious giant in the room, they've got 640,000 coins, and it's extremely unlikely that anyone catches them. So maybe the race is more like who can be second, who can be number 2, or who can be number 3, this kind of thing. Now that's at the global level, but I also see it like if you can be the top or one of the top few in your region or in your country, then that could be interesting too, because I think there are just kind of regulatory reasons why, and just kind of inertia reasons. Or there's a concept in investing on personal finance and things. It's called home country bias, right? Most people, they just overinvest in their own home country relative to the globe, right? Because they're not balancing, they're not investing in the globe in a balanced way based on the proportion of whatever the US market and the Chinese market or whatever. They often invest in their home market. So be it, right? So that's why if you are one of the top few Bitcoin treasury companies in your market or in your region, then you have there's a great opportunity there, right? Like a quick example is Metaplanet recently got included in some index, right? So think about, if some, very high net worth person is saying, hey, he picks up his phone and he's like, hey, I want some Japan exposure or whatever, or some fund is like, or some, other investment entity is looking at, oh, we're going to invest in the Japan index. Guess what's inside the Japan index? Metaplanet. What's inside Metaplanet? Bitcoin, right? So it's kind of a similar thing where if you get included in more indexes, that can also be a way of kind of receiving these fiat passive flows from all the no coiners out there. And so the other big one is MSTR had the S&P, they weren't included in the S&P 500. However, maybe in 1 or 2 quarters, they'll get included. And then that'll be a whole new source of demand. And of course, the whole preferred shares play. I think that's quite interesting because what we've seen now on MSTR with strategy, Michael has been stacking, and I believe this stat is correct. I think the last 2 or 3 weeks, he's been stacking without using the common equity ATM. He's been stacking out of his preferred share, out of preferred shares. And so I think I view that as a kind of a longer game. But yeah, zooming out a little bit, yeah, of course, the sector is in a bit of a lull right now. We can't hide that. Of course, you have to accept there's some volatility with this. It is more volatile than holding Bitcoin itself. But I believe it's coming back. I think it's maybe there was a bit of over exuberance earlier in this year where people were maybe overpaying on the MNAV, and maybe now people will be buying at MNAV levels that are sort of more reasonable. But I mean, who knows, right? Like if Bitcoin moves up really quickly, then maybe all the treasury companies all start pumping hard, and then MNAVs get again into this very high range. And I will say this, I think smaller Bitcoin companies can justify, like during the hype cycle, they can justify a higher MNAV to some extent, but then it sort of comes crashing down. And so I think you have to understand there is going to be just naturally, there's going to be some MNAV expansion and compression. And so you just have to accept that. And so I think it just means you have to be good at your entry price if you are going to be an investor in these things, but you have to also have a long-term view about where things are going. And so if you are obviously bullish on Bitcoin, then it can make sense to also be bullish on entities that take leverage to buy more Bitcoin. And so, of course, it's important that these entities, these treasury companies, have a safe leverage ratio with not very onerous terms on that debt and in the way that they achieved that leverage. And that's why probably most of the treasury companies are sort of somewhere in kind of like a 10 to 20, maybe 30% leverage ratio, but some of them have very low leverage. Although that's maybe a bit of an argument or a debate itself, because some people say, they should have leverage. Now, I mean, there's different arguments there about how it works. If they're an operational company versus are they a pure play, or maybe those pure plays that have low debt right now, they're kind of waiting for the right opportunity, right? They don't want to just take bad terms, so that maybe they're waiting for a good opportunity to get some leverage, and that is how these companies can actually outperform merely just holding Bitcoin. But I think it does require some conviction and some at least some decent time horizon, more like 5-year time horizon is how I'm seeing it, as opposed to in that recent hype cycle, people were just kind of jumping from whatever to whatever, and just kind of quickly, it was kind of like hot money flows. People were jumping out of the big ones into smaller ones because they were hoping it would pump harder, this kind of thing, where maybe some of the gains that were gotten were sort of early, like it was kind of like MSTR hit its high at, I don't know, like $500 or something like that, like the common equity. And now as we speak, it's $293. And so, but I'm still bullish on the sector. And I think obviously MSTR is kind of the blue chip of the sector, if you will. And of course, I think as long as these companies keep on executing correctly, right? They have a professional, competent team who keeps on executing, keeps on stacking Bitcoin, doing the right things, then eventually the cycle will sort of turn back. And I'll give it a funny analogy. I think a couple of years ago, it's like all the Bitcoin mining companies, their public equities were in the dumps, right? Nobody wanted those. They were sort of seen as like, oh, that's like very high risk. No one wants that. And then now we're living in the AI craze. And so because a lot of those Bitcoin mining companies, they pivoted to using, HPC AI, and maybe they got energy contracts. And so now a lot of those Bitcoin mining companies have now caught a huge bid, and they're all, pumping hard. And so they're all doing well on the whole AI boom or bubble, however you see it. So I think some of this is just, flows will rotate in and out, but you just have to have conviction, and you have to have that long-term view, both on Bitcoin itself and on the particular Bitcoin treasury companies that you choose to be invested in. Of course, you want to pick, the strong players in a particular market, or if you believe they have some kind of differentiator that differentiates them from some of the others out there.
You mentioned early in the conversation that at some point you gave 0.5 Bitcoin, half a Bitcoin for $50. uh, how comparable is the current volatility in Bitcoin treasury companies to what was Bitcoin at that time? And what would you say to an investor in Bitcoin treasury company that would feel hurt when the price goes down and happy when the price goes up, and how to manage those emotions?
So yeah, it's difficult, right? Like, and I don't have the, objective volatility stats to hand, but yeah, it probably is comparable, right? Like, it probably is comparable to like the 2013 cycle, or maybe some of the 2017 aspects of that cycle, kind of at the end when it got really crazy, because there were just, there were days when it would like drop 30%, 40%, and it was sort of no big deal because you were just so like, that's how volatile it was. It's just hard to convey, and it's hard to sort of, you know, uh, get that message across in a way. Now, of course, you have to sort of do your own understanding and do your own research and understand, okay, why do I believe in Bitcoin? And in this case, why do I believe in these treasury companies? Why do I believe they can win, right? Do they have a professional, competent team? Are they serious? Are they really, truly Bitcoin maxi? Or are they just sort of opportunistic, fly-by-night operator kind of thing? Do they have like serious credibility? And then I think it's just sort of understanding and sizing your, your portfolio and your sizing your bet per se, and just kind of zooming out, having that long-term view of where things are going. So I guess some of that is like the first time you go through some really crazy volatility, that's when you slowly start to earn your stripes. And then once you've kind of been through a few cycles, you become, what's the word? Sort of
Patient.
patient, or what's the word? Like acclimatized to it, or you kind of, the feeling that crazy, it sort of dulls a bit. You don't care as much. So I would say, that's kind of how you could see it. And being honest, I think I would say this, right? Being like, even just generally investing, like if you're talking about like just generally investing in stocks and equities and things, it is, buying low, selling high. So the paradoxical thing, the hardest thing is to sort of go against your instinct, right? Like oftentimes when you're new to investing, it can feel so good to be buying when everyone else is buying, and it feels like it's the good decision. And funnily enough, that's often a bad time, right? Like you might be buying the cycle top, right? That you might be buying $20,000 Bitcoin in December 2017, or you might be buying, and paradoxically, the time when it feels the worst subjectively, it's sort of, that paradoxically is often a value buy zone, right? Like that's like often, at least that's how it's been in Bitcoin. And I think it'll be somewhat similar, they're not exactly the same, in Bitcoin treasury companies. So I still remain bullish on the sector, at least with those treasury companies that have a good team and have like a good opportunity, the market that they're in. There's different ways that these markets, can vary, right? It could be tax treatment, it could be regulatory, it could be maybe low cost of operation, or maybe it could just be like there's a population in that country that's really into Bitcoin. And so there's something there, there's an appeal there that they might become investors. So I think there's all these different ways that, these different jurisdictions and different companies can differentiate. I think it'll be exciting to see where these things go. But you just have to remember that even for Michael and MSTR, like there were times where it looked like he was down, and he was copying the flack online and in the media. They were all saying, oh, he's down, or he's going to get wrecked, he's going to get liquidated, all this stuff. That's part and parcel, right? And you have to remember with MSTR, they started this in, I believe it was August of 2020, right? So that's now like a little over 5 years ago. There have been a lot of ups and downs for them. And of course, Bitcoin itself has been around, for 16 years or whatever it is. And so, there have been a lot of ups and downs just in Bitcoin itself. So you have to have strong conviction, both in Bitcoin and, strong conviction in the company that you're investing in.
Yes, to have conviction, strength, and courage is a clear characterization of Bitcoin maximalists. And to get to that point, you need some good time of education and learning about Bitcoin. So, Stephan, what would you say to shareholders of Capital B and shareholders of Bitcoin treasury companies that have just come into the space and have been starting to learn about Bitcoin through the Bitcoin treasury company? for them to learn more, and what would be your message to them?
So I've been saying this for a while. I think NGU, number go up, is what pulls a lot of people in, right? Because they see things go crazy. And then it's actually in the bear markets or kind of in the down cycle, that's when people actually take the time, not everybody, but some people take the time to go read some of the books or listen to the podcasts like my own or like yours, or read books like, the Bitcoin Standard or Bullish Case for Bitcoin or these different things. That's when you sort of build some of that conviction in a way, because you might have come into it thinking, just buying it, not really knowing, and then actually now it's time to actually, came for the NGU and stayed for the sound money and these broader freedom and ethical ideas. The other obvious point, as any good maxi will tell you, not your keys, not your coins, right? So it's very important that everybody who can tries to self-custody their Bitcoin. And of course, if you have started with Bitcoin treasury companies, well, then also think about actually getting some Bitcoin itself and using self-custody, right? Get your own phone wallet to start, and then get a hardware wallet to self-custody some of that Bitcoin. And that's actually really instructive as a process as well. So it's really good for people to learn that also. And then over time, as you try to learn more on the technical side of things, that's where, you might listen to different podcasts, you might read some different books and consume different forms of content so that you understand a little bit more about how the system works, and where it came from, right? Like these cypherpunks and the Austrian economists and libertarians and people who were sort of early into Bitcoin or were part of the prehistory of Bitcoin, right? As you learn a bit more about that, then you start to sort of understand how Bitcoin was born and where many of us believe it's going, right? Many of us believe it's going to become global money. It's going to become the money of the world. And so I believe it's going to, $10 million plus per BTC. Maybe that's 20 years away. Who knows? But I'm here. I'm strapped in for the long haul. And I suggest other people do the same.
Thank you so much, Stephan. It's been a great honor and pleasure to have you here. I wish you well in all your enterprises and at Orange BTC as well. So good luck in everything, and talk soon, Stephan. Thank you so much.
Thank you, Alex. Thank you for inviting me.